The Reserve Bank says there's still a chance that rates will rise, but investors don't think so. One of the biggest deals of the year finally gets shareholder support, and a New South Wales number plate is set to sell for more than $10 million in an online auction. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Wednesday, the 20th of December, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you've got a great interview. If you're interested in investing, well worth sticking around and listening to this one a little bit later on. Callum Burns, the Managing Director and Lead Portfolio Manager of the ICE Fund.
Yes, ICE that is. It's a really interesting chat because what he does is break down small caps from that big group into two parts, the good part and the bad part. And so he runs through some of the companies that he says, look, they are small caps, but they're sort of lopped in with all these other companies that aren't doing so well. But these particular ones are doing really well. And in some cases, they're doing better than large caps. So they're well worth a viewing. And that's exactly what we spoke about.
Yeah, it's a really interesting conversation for anyone interested in investing, or just anyone at all, really. It's a good chat. It's coming up a little bit later on. The main story this morning, Sean, the Reserve Bank says it will deliver another rate hike if inflation stays too high. But financial market investors don't think that's going to happen.
Yeah, so the Reserve Bank board minutes, that's of its meeting 2 weeks ago when it didn't lift rates, were released yesterday. They say that members agreed that any future tightening of monetary policy depends on whether inflation returns to the central bank's 2 to 3% target in a reasonable time frame. The Reserve Bank said the case for a further rate rise stems from the fact that inflation is increasingly demand-driven, not supply-driven, which is where it was a couple of years ago. And there's a risk it could remain above its target band beyond December 2025, which, of course, is the Reserve Bank's forecast. The economy is still running at a pace viewed as inconsistent with low inflation, the minutes say. They also comment, members acknowledged that consumption growth has been quite weak, as many households are experiencing a painful squeeze on their finances, with inflation and higher interest rates weighing on real disposable incomes. Indeed they are. The board is also encouraged by the decline of inflation globally.
So the Reserve Bank ends the year seemingly happy with the job it's done. What are the chances then of a rate cut next year?
Judging from pricing in the bond market, the first cut is likely in the second half of next year, possibly August. Now, there is still a 4% chance of a rate rise priced in to the February Reserve Bank board meeting. A number of senior economists actually think there will be rate cuts in the second half of next year, including the chief economist at ANZ. Of course, all this does depend heavily on what the data says, particularly the late January inflation reading, and plenty of other data, of course, in the first half of 2024. Still, Michael, we enter next year looking at rate cuts, whereas 12 months ago, it was all about rate rises.
Certainly was. Okay, turning to local markets now. How did they perform yesterday?
It's on a tear the last few weeks. The local market, the S&P ASX 200 closed up 1% yesterday to 7,489 points. It's up about 3.5% in the last 5 trading days. It's just 1% below its 52-week high. It's actually at its highest point since February. Plenty going on there. Utilities led the way yesterday, followed by tech stocks and consumer discretionary companies. But it was a very broad-based rally with 75% of stocks finishing higher. QBE was up 3%. James Hardie and Goodman Group, as well as Aristocrat Leisure, were all up 2%. And a bunch of companies above 1%. REA Group, WiseTech Global, Transurban, Wesfarmers, Woodside, Macquarie, Fortescue Metals Group, etc., etc. Qantas didn't do so well though, Michael. It was down 2%. Best on the day was Battery Metals Group, Liontown, up 11%. While Neuren was up another 8% after Monday's big jump. Worst was Weebit Nano, undoubtedly my favourite name for a company, Weebit Nano. It was down nearly 6%, while Tabcorp wound back some of Monday's gains, dropping 5%.
Weebit Nano sounds more like a computer game, don't you think, than a company?
Yeah, definitely. A little bit of corporate news around yesterday. Aristocrat Leisure, Macquarie Group and Westpac were all scheduled to pay dividends to shareholders. Nice little Christmas present, that one. AGL Energy said it plans to build a 500 megawatt grid-scale battery at the company's Hunter Energy Hub in New South Wales. That's expected to actually be operational from about mid-2026. And Telix Pharmaceuticals submitted a license application to the US Food and Drug Administration for a radiopharmaceutical imaging agent for kidney cancer. If approved by the FDA, it will become the first such technology to be commercially available to patients in the US.
Sean, you mentioned before the strong performance of local markets to close out the year. Is this the Santa Claus rally that you were alluding to in kind of recent weeks?
Yes. Yes, definitely. I'd say the Santa Claus rally. I didn't even realise I was alluding to a Santa Claus rally. There is such a thing as a Santa Claus rally.
Well, you mentioned it in passing and it intrigued me because anything that kind of gives markets some personality, I love it. And that's why I love it kind of when you have a sea of red or a kind of an ocean of green or something and suddenly got a Santa Claus rally. I'm like, here's something I can really connect with. And so when you said that today, when you said markets are on a tear, I'm like, Santa Claus rally, that's what it is.
Yep, I hope so. Only a couple of days till Santa Claus arrives, so yeah.
That's good timing for it then. What's happening in international markets?
Wall Street's been a touch quieter in recent sessions, with investors still of the view that the next move in interest rates in the world's biggest economy is down. Interesting story out of Apple. It's pausing sales of its Series 9 and Ultra 2 smartwatches in the US from this week as it deals with a patent dispute over the technology that enables the blood oxygen feature on the devices, according to Reuters. The move comes after an order in October from the US International Trade Commission that could bar Apple from importing its Apple Watches after finding the devices violate medical technology company Masimo's patent rights. Plenty of work going on in that one. There was also a big deal in steel, I like that. US Steel agreed to sell itself to Japan's Nippon Steel for $14.1 billion US, capping months of speculation about the fate of the American industrial heavyweight. Away from equities, oil prices are up again, with Brent trading around $78 US a barrel, gold steady at above $2,020 US an ounce, and the Aussie dollar is buying 67.2 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Allchem and Livent's $9.7 billion proposed merger has won the support of shareholders, with more than the needed 75% voting for the deal.
The combined businesses will become the third largest lithium player in the world. Overnight, Australian Time shareholders in New York listed Livent were expected to vote for the deal after Allchem's shareholders said yes yesterday. Peter Coleman, Allchem's chairman and former Woodside chief executive officer, will become the company's chair. Livent chief executive Paul Graves will become CEO. The 56%, 44% link-up between Allchem and Livent means each Allchem share will be exchanged for one share in a newly created US company called Arcadium Lithium. Not surprisingly, the 56-44 link-up means that the Allchem shareholders end up with 56% of the company.
Australia Post will pay about $2.9 million in compensation to more than 10,500 business customers and an additional 1,000 Star Trek customers after the group admitted they likely engaged in misleading or deceptive conduct.
Sounds sexy, doesn't it? Very exciting here on a Wednesday morning before Christmas. Deceptive conduct. Australia Post and Star Trek admitted they likely misled customers by failing to accept compensation requests and incorrectly advising some businesses that they were not owed compensation for lost or damaged articles for 4 years until October 2022. In a court-enforceable undertaking accepted by the consumer watchdog, Aussie Post and Star Trek have undertaken to provide compensation for lost or damaged parcels to affected customers. Under the consumer guarantee rights in the Australian consumer law, consumers can request a remedy if a product is not of acceptable quality or a service is not performed with due care and skill. Can you imagine how many parcels get broken on the way? A lot.
You can only imagine. Yes, I imagine a lot. We can estimate a lot, Sean. Now, we talked about Azure Minerals yesterday, which is the lithium company whose share price had jumped 1,700% this year. Yesterday, it said it had entered a binding deed with Brazil's SQM and Gina Rinehart's Hancock Prospecting to buy all its shares via a scheme of arrangement for a cash amount of $3.70 per share.
Yes, $3.70 per share. Now, the original offer was $3.52, made in October. They did the deal at $3.70. At the beginning of the year, Azure's shares were worth 22 cents. How's that? 22 cents to $3.70. SQM and Hancock have locked up more than 60% of stock after winning the support of two major shareholders. One of those is billionaire prospector Mark Creasy. He's like a double billionaire now or something like that. And Delphi Group. Basically, with those two on side, it means the deal is effectively done.
Sean, this story got a fair bit of attention yesterday. The Chief Minister of the Northern Territory, Natasha Fyles, has resigned over owning shares in South 32, which owns the Groote Eylandt mine, where she had declined to increase government testing on its health impacts.
Yes, I feel a bit sorry for her, to be honest. The Labor leader announced she was stepping down yesterday after online masthead NT Independent reported she owned undisclosed shares in South 32. Now, Ms Fyles had been in the Territory government's top job for less than 18 months. At a press conference in Darwin, she said that not declaring the small shareholding in South 32 was an error and not intentional. She intends to remain in Parliament. She said she had shares in BHP since she was a child. These were a gift from her late grandmother. Then South 32 demerged out of BHP, and as a result, she ended up owning the small number of South 32 shares. South 32 owns the world's largest manganese mine on Groote Eylandt, and that's where she made that decision to not increase government testing on that mine's health impacts. Got herself into a muddle. She came out yesterday and said, she has to step down in terms of good corporate governance.
Yeah, it's hard not to feel just a little bit sorry for her because it does feel like it wasn't hugely deliberate in that case.
Yeah, exactly.
Now, Sean, Origin Energy will spend another $530 million on British energy retailer and tech platform Octopus Energy, boosting its stake in the company to 23%.
Yes, the energy giant is certainly moving on from the failed bid from Brookfield and EIG. Now it owns about £1.43 billion worth of Octopus. Origin CEO Frank Calabria says that the success of Octopus since the initial investment back in May 2020 has exceeded expectations, therefore it wanted to buy more. Octopus is an interesting company. It recently acquired a couple of competitors in Britain, and together with organic growth, it's now got a 21.3% market share, which has overtaken the former market leader British Gas. It also owns the Kraken technology, Kraken technology platform. It can be licensed to other energy providers as well as other utility providers. It's kind of like a mega customer relationship management platform, and more than that, because it actually helps in terms of accessing gas as well as doing bills and all sorts of things. And I think that's probably what Origin like about Octopus as much as anything else.
Lots of different parts to the Octopus business. There's probably, 8 arms to it?
Yes, Michael, 8 arms to the Octopus business.
It's just, I don't know. We're getting close to the end of the year, Sean.
Yeah, it's the grin on your face. You were so proud of that one.
It's not even that I'm proud of it. It's just like, it's kind of low-hanging fruit, that one. It's just because we're getting towards the end of the year and you're just like, it feels a little bit lazy making an 8-arm joke about a company called Octopus. It wasn't even that well put, but you know what? It was the best I could do at the time.
You did it. You went with your heart and your soul, not your mind.
Yeah, no backing down now. Finally, Sean, how about this one? A New South Wales number plate could, maybe, become the world's most valuable after the price tag of New South Wales 1. That's all it is. It's just the number 1. Rocketed to $10 million in an online auction.
According to Lloyd's Auctions, the rare New South Wales 1 number plate hasn't been offered via a public auction, with the heritage plate last changing hands more than 110 years ago. It was originally owned by the first New South Wales Police Commissioner. The auction's been going for 3 days. There's still 40 days left of bidding. Now, if this pace of bidding continues, there's got to be a big if over that one, it will challenge the world's most expensive number plate ever sold, which was P7 in Dubai earlier this year. That was about 22 million Aussie dollars. In 2017, the single-digit 4, the New South Wales plate, sold at auction for an unprecedented $2.45 million. In Victoria back in 2020, a buyer paid $1.1 million for the number 26. Last year, a Victorian plates with the number 994 sold for $391,000. Another buyer splashed out $330,000 for 621. These people are mad, by the way. I don't want to make an editorial judgment on this, but why would you spend this much money on a number plate? Anyway, little history lesson for you. The first of New South Wales all-numeric plates were introduced in 1910, and they ran from like the number 1, the plate being offered, to 274,000. So it was 274-000. Kind of cool. Originally, it was a black character on a white background. That was swapped over in 1924. But yeah, interesting to see where this one goes, how much it sells for.
There's some fantastic pictures, Sean, doing the rounds of this number plate. And you see it was owned by New South Wales politician Sir Frederick Stewart for a very long time, and his widow, after his death, put it on her car, which was a Ford Fairmont. And just cruising around town in a big old Ford Fairmont with the New South Wales 1 plate on it. Never would imagine that one day it would be selling for more than $10 million for that simple number plate. It's quite an extraordinary story.
Pretty incredible.
All right. Turning to international news now, Sean, oil prices climbed and shipping in the Red Sea is grinding to a halt after Iranian-backed Houthi militants stepped up attacks on vessels, raising fears about the impact of the Israel-Hamas war on the global economy.
2 European oil and gas giants said their tankers will avoid waters off the coast of Yemen, an unavoidable waypoint for ships using the Suez Canal to cut between Europe and Asia. They join major container shippers who pulled out of the area last week as Iran-backed Houthi militants stepped up attacks in support of Hamas, according to Bloomberg. Yesterday, the US Secretary of Defense said America and its allies, including the UK, Canada, France and others, have agreed to create a naval task force to counter attacks on ships in the region. Attacks by the Yemeni militant group are disrupting maritime trade as leading global freight firms reroute around the Cape of Good Hope to avoid the Suez Canal. That is a much, much longer journey. Companies like BP and AP, Mullen Maersk, they're companies that transport consumer goods, commodities such as coal and corn, energy supplies, etc. They all face much longer journeys at this point. Now, last night, several of the countries agreed to jointly carry out patrols in the southern Red Sea and Gulf of Aden to safeguard commercial shipping.
Yeah, it's a big story, that one. Up next is the Fear and Greed daily interview. Callum Burns is your guest. He's the Managing Director and Lead Portfolio Manager of ICE Investors, the ICE Fund.
The ICE Fund, that's ICE as opposed to the ICE Man. The ICE Fund, he is a man who knows his small caps, Callum. We talked to him about the small caps that he likes. He says it's a bit unfair plonking all small caps into one boat. There are a bunch of them who are actually pretty good. And that's what we talked to him about.
Yeah, absolutely. And we're not an investment podcast. You should seek professional advice before making any investment decisions. But it is interesting hearing what a professional investor like Callum Burns has to say about the matter. That's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And of course, Sean, today is Wednesday. And we know what that means.
How do they afford that day? What's it on today?
Well, How Do They Afford That is obviously our sister podcast that features me speaking to financial planner Canna Campbell.
Well, no, I don't think that's right. I think it's more about you listening to financial planner Canna Campbell. I don't know that you're adding the value in that relationship just quietly. Don't mean to be rude.
I acknowledge that I add little value.
Entertainment.
Except just giving Canna someone to educate. And that is what today is about. It's a little bit embarrassing for me, Sean, because Canna and I have been doing that podcast for well over a year now. We do it once a week. And so there's 60-something episodes. And do you know how much of what I have learnt from Canna I have actually implemented? Zero. Absolutely nothing. But I go off with like the best intentions. After every episode, I'm like, okay, I've learned how to budget. I've learned how to set up this account. I've learned how to kind of polish up my super. I've learned all of it. And every time I go, yeah, I'm going to do it. And I just haven't. And so today is the episode where Canna calls me out on all of it. And she kind of works through what is the... And I don't think I'm alone. I'm probably not alone in this. That a lot of people have the best of intentions when it comes to their money, but there is something preventing you actually doing it. It's kind of like a money block is what Canna describes it as. And usually there is something fairly simple preventing you from doing it. Maybe it's mistakes that you've made in the past, or maybe it's just not knowing what the first step actually is to making some changes. And so we work through that one today. It is, as I say, a little bit embarrassing for me, but look, I'm willing to take one for the team. If it is going to help educate more broadly, and in particular educate me, then I'm willing to do it.
Take one for the team, and I'm going to go off and polish my super too.
Goodness me, Sean. You can find How Do They Afford That wherever you listen to podcasts, or I'll put a link in today's show notes as well. Make it very easy. Thank you very much, Sean.
Thanks, Michael.
It's Wednesday, the 20th of December, 2023. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.